Hello, and welcome to the October market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. As we kind of expected, September was a volatile month. We saw a lot of mixed news. We saw markets drop and then bounce back towards the end of the month. There was a lot going on. It was interesting to see the split in how markets performed. Large companies, for example, in the S&P 500 and the Dow Jones Industrial Average, dropped a little bit more, but ended up just a little bit down for the month. But smaller companies and companies outside the U.S. actually did well on the month. The NASDAQ did well, emerging markets did well, and developed countries did well as well. And that's interesting because it points to what's going on in the larger economy. We actually saw some fairly bad news at the start of the month. Business surveys, manufacturing, for example. We've had some concerns about that. There has been some weakness, but we actually saw a significant drop down in the survey of how companies feel at the start of the month. It actually dropped down into contractionary territory, which was a bad sign. Fortunately, just today we got some news that it moved back into expansion, but what it does illustrate is that the recovery in that sector is probably not here just yet. Second of all, though, and more importantly, we saw the service sector pull back as well. We saw a pullback much larger than had been expected, and while it still remains in positive territory, it's still expanding. Nonetheless, that was a concern about where the economy was going from here. Should we be concerned? Probably not that much, and the reason for that is the consumer continues to do very well. We actually saw consumer confidence tick up to a 9-year high. Think about that. That brings consumer confidence back to where it was before the financial crisis. Consumers are willing to keep going out there. They're also able to because personal income growth continues, and it continues at a very rapid rate. Personal income is actually growing more than expected, and we're seeing revisions to previous numbers as well. So that's quite strong. So why aren't consumers spending? Because at the end of the day, retail sales aren't doing that well. Well, a lot of it is due to uncertainty. And certainly right now, a big factor in that uncertainty is the pending election. Is it going to be a sustained headwind? Probably not. But it's affecting both consumers and business. In other words, a lot of the weakness that we're seeing right now is very possibly due to the real policy uncertainty that we're facing in the election. It's not due to the fundamentals, which are pretty solid. And it's not due to risks outside the United States, which have largely receded. It's not even due to worries about the Fed. Even though the Fed has stepped up and said we're actually pretty confident about the economy, they're still holding off on raising rates. So in other words, the risks are lower than they have been. The fundamentals are solid. And what's holding us back right now is very possibly temporary. That said, we will see. From where we are right now, we certainly face risks, but the trend looks good, and I think we'll probably do, hopefully, pretty well in October. But we'll talk about it next month, and I'll talk to you then. Thanks for watching.